Good morning, everyone, and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday, the 21st of February. Now, risk appetite is still being driven around by the geopolitical threats going through the Ukraine situation, with Russia and Ukraine still on the brink of some sort of conflict. The potential for that to blow up at some stage soon is still driving fear through major markets, and we can see that is again the theme that we had over the weekend. There's a bit of a recovery that we've seen on Monday morning, but essentially this trend is still for safe haven plays to be outperforming, to see the higher risk assets such as equities under pressure as a general rule. But certainly the how the geopolitical swings of expectations surrounding this Ukraine and Russian potential conflict is going to be driving markets until it really recedes, and at the moment it doesn't look as though that is going to be the case. It all remains pretty much on a knife edge. Now, it is President's Day in the US today. Public holidays in the US tend to mean thinner volumes, lower liquidity, and generally speaking we see lower volatility. But given how much markets are on edge at the moment, that may actually mean that we see spikes of volatility in isolated instances, and that could mean difficult markets to predict at the moment. So today might be an interesting session nonetheless. Now, what we also have is an RBNZ rates decision this week on Wednesday, but looking forward to that is one of my charts that we've got on today. We've got the Kiwi dollar, which is up towards a key level of resistance ahead of that, which looks like it's going to be a rate hike there from the RBNZ. Now, I'm also looking at the gold chart today because we've got obviously safe haven plays in focus, and gold has been spiking higher recently, really strong, but it's a little bit of a pullback this morning, and it'll be interesting to see how far that goes. And finally, looking at the DAX, under pressure again on Friday, back to that crucial 15,000 level, rebounding once more. But again, is this an opportunity, or is it just a selling phase that we're likely to see resuming in due course? So let's have a look. So onto the Infinox MT5 platform, starting off with the Kiwi dollar, which is a chart I don't often look at, but it's at a crucial technical level as we approach this RBNZ meeting. Certainly the recovery that we've seen in the Kiwi, one of the most risk positive pairs in the Forex major currencies, is suggesting that there's going to be a rate hike by the RBNZ this week, and it certainly is up towards a key testing level of the downtrend. We've also got the moving average of the 55-day moving average, and also the resistance of the pivot at 67.30 area. It's actually testing that level at the moment now. We can see this zooming in today. It's rallied once more. Also that RSI, look at that, 57 basically was the level it hit back in January. And again, it's up towards that level. So all these confluence of resistance areas that we can see on the technicals suggest that this is a crucial moment. A closing breakout above that resistance around 67.30 really does suggest that we're going to be moving towards the next level of resistance area, 68.50 to 68.80 area. So that's really what we're looking at for the test coming into this RBNZ meeting, is whether we can sort of clear that move and continue to break to the upside. You've got initial support coming in at 66.80 area. That's the reaction low that we've had today, and also an old bit of a breakout level as well. So that's obviously where we see the key sort of trading area now on the Kiwi, 66.80 up towards that 67.30 area. The gold chart has been rallying hard actually in the recent weeks. It had this sort of turning candle, the bearish engulfing move that we saw last week as the news seemed to be improving on the Russian situation, but then it looked as though that the Russians were just playing the Americans, and then there's two more strong bull candles that we saw back end of last week. Bit of a consolidation move on Friday, a bit of a drop lower today, but essentially it's just unwinding a little bit from that 70 level on RSI, just unwinding on that 4-hour chart as well. It could essentially just be a move back towards the 1880 area, maybe. Seems as though that's likely to be buying opportunity area if this geopolitical tension continues, and I think that would be likely to be a move that ultimately, if you go into the weekly chart, you can see that the key levels of resistance is 1918 actually, from that reaction high from last year in May. So if that breaks out above that, you're looking at 1960 area. And finally, on the DAX, we've seen this trend lower over the last, well, throughout 2022, actually, all these succession of lower highs. Every time it comes back into 15,000, you find buyers, though, and it seems to be on a consistent basis, and it's actually been the case for several months, going all the way back through into early 2021, actually. So that's a really key level, 15,000. Every time you get towards that, buyers re-emerge. However, this is a downtrend, and the downtrend comes in at the moment at 15,400 area. So that seems to be sort of the limit of where we see the recovery potential at the moment. You need to see a break of that downtrend to really suggest there is a potential for a recovery, but essentially every time it sort of does this rally, it gets lower highs and then falls away again. Momentum is not looking great, still set up configured for selling into strength, so selling around that downtrend would seem to still be the way to play this for further tests of 15,000. Thanks for watching. I hope you found that of interest to your trading. Now, I'll be back on Wednesday. We'll be looking at how the RBNZ rates decision went and looking at how major markets are shaping up. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much, and good luck in your trading, everyone.